Everyone. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in non-QM and alternative documentation programs. So I'd like to thank everybody for joining us today for our Daily Rates Live show, where we go through all of the different rate options that are out there in the marketplace. And I'm joined by my co-host Kyle Hiersche, our COO, and Jose Gonzalez, our sales manager, who can go into more details about some of our detailed quotes. So every morning we like to go through the rates that we offer from all of our partners. And then we also like to highlight a specific program. So what we're going to do today is go over some of our specialties. Our expertise is in non-QM loan programs. So we're going to pull up one of our advertisements. So these are some of the programs that we specialize in. Non-QM loan programs typically mean not conventional. So we're not using conventional guidelines there, conventional DTI or conventional income. We're going to use alternative income. Typically that means bank statements or P&L or 1099 or some kind of alternative documentation. There's a whole bunch of options which we'll go over. And these are typically for self-employed borrowers. They can go up to 90% LTV for a primary home with no mortgage insurance, which is amazing. We have options typically above 600 credit. Obviously the LTV changes based on credit. Jose will go over a few options on that as well. We have interest only available, as well as the 30-year fixed, and 2-year self-employment is always required. And these are also available for purchase and refinance. So once we go through kind of the general programs that we always go through every morning, we'll also touch on these programs and how Jose go through a detailed quote with all of the rate options that we'll go through typically with a client. So I'll go through the quick pricer tool here in a second that we always do every morning. So let me go ahead and pull that screen up for everybody. And there we go. So this is our quick pricer tool at the Mortgage Calculator. Again, we're a licensed lender in 15 states for primary homes, as well as almost every state in the U.S. for our commercial DSCR business purpose loans that we love to do as well. So today we'll go through a couple different scenarios just to check out what the rates are this morning for all of our different programs. And we'll use this tool that is built for mortgage professionals. So again, if you want a detailed quote like Jose will go through here shortly at the end, please get with one of our licensed loan officers. This is just a tool for professionals just to indicate the rates for this morning using our pricing integration. So we'll go ahead and slide this up to 80 LTV for our scenarios. This desired price means typically our customers are asking to buy down the rate a little bit. So we'll do a 1 point of buy down here. We're going to do a conforming loan, a purchase, a 30-year fix, primary, single family, 1 unit, and we'll use Florida, Miami-Dade, which is where our office is based for all these scenarios. We'll also use for all of our test scenarios here a 760 FICO score and a 40 DTI estimated here. So these are our options currently for a standard purchase with a conventional loan. And we'll see here that it's actually live and they're security testing us. So now that we got through the security, so these are our rates right now from around 6125 and up. This is for a specialty program from Fannie Mae for a home ready. This is a specialty program from Freddie Mac for Home Possible. These are for our borrowers that might qualify under an area median income. So please get with our loan officers to see if you qualify for that. Let's scroll down to the standard 30-year fix. So our first option here for a 30-year fix is at a 6.375 rate for a little less than 1 point of buy down here. So these are great options for a standard purchase. Again, hopefully the rates are updating every day. The rates have gone down a little bit since our last show and obviously recently. So we'll continue to watch these trends on the show. For now, let's go ahead and go back to the quick pricer and pull up another common scenario. So if a customer or a borrower does not qualify for conventional financing, maybe doesn't have the DTI or some other limitations, we obviously offer all of the other programs from FHA, VA, USDA, and then we'll get into our expanded guidelines, which are our non-QM programs. So the one that we always want to quote here every morning as well are the FHA programs. So super common. Someone who doesn't quite qualify for conventional can still purchase a home under FHA guidelines, which are expanded on their DTI and whatnot. So we'll keep everything else the same here for our scenario, and we'll go ahead and see what the FHA rates are for our partners here. So it looks like we have a rate here for FHA from 5.625 for even a little bit less than 1 point of buy down. And we have a few other programs throughout that vary in cost from there. So these are great options. Remember to keep in mind that FHA does have some additional costs, such as the monthly mortgage insurance that are required. So the APR is always a little bit higher on FHA. So usually key in on that to compare loan programs. Now we can go back to our quick pricer and pull up what Jose will go into detail here in a little bit on. But we always want to just check out our general non-QM rates. So we'll pull up our scenario again here. For a borrower who doesn't qualify for conforming or FHA or VA or USDA, which are specialty programs. Remember, if you qualify for VA, please get with us. We can quote all those programs instantly as well. And USDA, which is where the property must qualify. So if you qualify for those programs, please let us know. We can quote them. But what we get excited about here are our customers that don't qualify for any of the standard conventional conforming programs or FHA or VA or USDA. We have hundreds of loan programs that go beyond that. So we'll check out our expanded guideline options, keep everything else the same in our scenario, but you'll see here now we have our expanded income verification. So under our non-QM programs, we can do full doc, which is what everybody's used to for FHA and conforming, but we also have our alt doc options, our asset related options, our bank statement options, our DSCR options for investments, and of course, our most popular, which we'll pull up right now, are our bank statement loan options. So we'll go ahead and check that out here for our pricing scenario. This is our most common request for self-employed borrowers here. So we have to check that box. So typically these are like our realtor partners. We love to work with realtors. We can use their bank statement income rather than their full doc income to produce a DTI and qualify them for the loan. So anybody that's in the gig economy, self-employed, files a Schedule C, any of those types of employments are eligible. We just have to make sure you're self-employed. And we will go ahead and check out what this scenario looks like this morning. So our live rates here, we have hundreds and hundreds of programs. You'll see here from 7.25 with a little bit of cost there, and varies up to the 9s, 10s. These are very specific programs. So please get with our loan officers that can find which program works exactly for you. So since these are very specialty, we got to see which one fits best with you. Some of these might allow like a bankruptcy or some other credit events. So these are very special. Now we can see that in general, though, they're around the 7s to the 8s. They're obviously going to be higher than all of the conforming rates, but these are great options for our borrowers to still get into properties using bank statements as documentation where they might not otherwise qualify and still get some very decent rates. Hopefully, as the rates go down, we will watch these continue to trend down as well. Now, Jose will go into a detailed example of how we have other documentation besides bank statement, which the one that is most popular besides bank statement, the second most popular, is our P&L program. And Jose will go over in detail of what makes those different and why we would go with a P&L rather than a bank statement, and as well as show you all the other rate options. So you can get this down into the 7s, obviously, if you buy it down, which a lot of our customers are asking for these days, or what are the buy down options that we have, which we do have on both conventional and non-QM. We do have the temporary buy down options and some ARM options available as well. We don't go through that in this show though every day. Now, the one other thing that I want to go through before I pass it over to Jose is going to be our investment options. So typically, our most common customer is looking to purchase an investment property, and a lot of times they're looking to use alternative documentation, but we'll go ahead and compare a conforming loan for an investment property here real quick. And then we'll also pull up our expanded guideline options, which have a whole plethora of other programs that we can use if a customer doesn't qualify or doesn't prefer to use the conforming options. And we'll talk about that a little bit as well. So we'll do a conforming loan. Again, 1 point in buy down is what we're targeting here for an investment, single family purchase, 80 LTV, 760, everything else the same as our other example. And we'll see here that the government entities, Fannie Mae, Freddie Mac, that do these loans have added some significant loan level price adjustments. So there are some significant costs or discount points you see here in this column for investment properties under conforming programs now. So unfortunately, we don't have a lot of programs where we can get the costs down below into the ones where we were targeting. But you see here, we still do have some options from 675 for a little bit of buy down. I probably wouldn't recommend that to my customers, but right here is a great option. So this might be one that we would offer that has a reasonable buy down. But again, our most common customers are asking, how do we do it with less points? And that's where our expanded guidelines come in. So for an investment property, expanded guidelines really makes a big difference because we're already at a pretty high rate and cost scenario here for conventional. So we talk about this on a couple of other shows this week of where our investor clients are typically, even though they may qualify for conventional, they're actually going with non-QM. So let's go with our non-QM investment options for our final pricing scenario. We'll pull everything up the same that we have been doing. We will use expanded. We will use investment. And when we're doing a non-QM or expanded guidelines for an investment property, we always add a prepayment penalty. So I'll go ahead and put a prepayment penalty of 3 years on here, which is the most common request, which does allow us to get the best rates and terms under these non-QM programs. So that is just a common thing that we have. Obviously, you can still do it with no prepay, but it does get a little bit more expensive. So for our scenario here, we will pull that up. And typically when someone's buying an investment property, probably our most common request is to use their business bank statements if they want to use that. And then our most popular loan that we end up going with is our DSCR program, which we'll pull up in a second. But first we'll do business bank statements. So if you want to still use income, but use alternative income under our expanded guidelines for an investment, this is what the scenario looks like this morning. So here we have some rates, again, for 1 point. So very reasonable buy downs compared to the conventional that you guys just saw, right? So even though the rate is higher, remember the buy down here is reasonable because these non-QM programs, we can basically set them up how we want. So we can go up in the rate and therefore alleviate some of the costs involved. Now, you can see here we have programs from 8625 all the way into the 9s and 10s. Again, these all vary because these are very specialty programs. So please get with us or one of our licensed teammates if you want to check out which ones of these you qualify for. Now, the other option that I want to go through, again, our most common loan that we end up doing, we love to quote all our investors multiple options. So we'll always quote them a bank statement or a full doc and a conforming. But typically what our investors end up going with is our expanded guidelines DSCR option, which requires no employment, no income documentation, and basically allows our investors to purchase investment properties with relatively no restrictions there. So you can see the rates here are relatively reasonable and the costs reasonable compared to the conforming programs where we have a lot of costs. So you'll see here, for even less than 1 point buy down, we have our DSCR program coming in just under 9%, which is great for our investors as long as the property is cash flowing. Typically, we can qualify here. So we have programs from 1.0 all the way and up. So please get with our loan officers. They can explain a little bit more about what these DSCR values mean. We go through that in a couple other episodes of this show if you're interested. But we have a ton of options you see here for DSCR, ton of different rates and options with different DSCR values and whatnot. So there's a whole bunch of great non-QM programs that we offer. Again, we could go through this all day and show different scenarios, but let me go ahead and bring in Jose, who can actually show us a live scenario for what he likes to recommend typically for those borrowers. So let me go ahead and stop my screen here, see if Jose can pull up his example. All right. You about ready there, Jose?
Uh-oh, did we lose you?
Might have lost him. I think he's got his example pulled up. He was trying to screen share it.
Jose, you there, bud? Well, looks like he dropped out. Maybe he's trying to come back in. So Jose's going to go over the programs here when he pops back on. But just to talk a little bit about us in general here at the Mortgage Calculator, we are licensed in, as Nick said, 15 states for primary residences. We can do loans in most states when it comes to investment properties. We have over 350 loan officers all around the country. Our loan officers here not only can help you with conventional FHA, VA, USDA, but we are specially trained in these non-QM programs, like Nick was just going over, the bank statement programs, the DSCR investment properties, which is really one of the things that we specialize in. So if you are an investor or a realtor or anybody looking to purchase something, refinance something, definitely get with one of our loan officers. You can contact them directly, or you can go to our website, themortgagecalculator.com. They can help you out. 90% of loan officers do not know how to help self-employed borrowers, and we make sure that all of ours do for all these cool kind of programs. I see you're back, Jose. Are you there, or are you frozen? Oh, I think he's frozen there. So yeah, definitely get with us. Get with one of our loan officers. We can help you out with all these cool programs. We do this every morning at 11 a.m. and go through the pricing for all the different scenarios, so you can actually see our rates, real rates live, and view the different scenarios we have live. So very transparent here. Tons of great programs, tons of great loan officers that are trained to handle more than just your conventional loans, that specialize in self-employed borrowers, specialize in investors. So definitely get with us. Do you want to go ahead and wrap it up then, Nick, if Jose's not going to be able to jump on here?
Yeah, sure. We can just go ahead and wrap it up. I guess I'll show the program again.
Yeah, absolutely.
But this is the program that we were going over today. Make sure you check out the non-QM programs for self-employed borrowers up to 90% LTV with no MI, 600 credit, the 3 million loan. So these are the options that we have. And if you want to get a detailed quote, go ahead and get with one of our licensed loan officers. Let's go ahead and take off for today. Thanks everybody for joining us, and we'll check you tomorrow.